Welcome to this week episode. My name is Dr. Oluwasegun Julius Aroba, the Wealth, Financial, Entrepreneurship Mindset Surgeon. In this week episode and masterclass, I'm going to be talking about tax strategies for generational wealth. Taxes are very powerful tools, as people always say, and one can actually look for a way to erode wealth if not carefully managed in this day and age. And that brings me to let you know about a book called The Wealth Beyond Lifetime, which is this book you're seeing in here. It is on the chapter 7 of that book. And today, tax is one of those prominent strategies that one can use to be able to see how to avoid being in the government net. When I mean net or trap, most people in this day and age and time, they tend not to know what are the strategies behind wealth and how to be able to evade, or also how to be able to minimize taxations. Tax has actually hit into the heart of so many people in this day and age, and this has actually created a lot of barriers in building or preserving family wealth. When you look at the wealthy ones of today's age and time, they are those that actually know how to be able to preserve their wealth, and they minimize in terms of falling into the government traps in different countries. As an entrepreneur or as someone who is actually deliberate, that is in building wealth creation for their life, it is important for you to know that you need to create a long-lasting wealth for yourself and your family. When you want to create a legacy that's actually existing, that can exist beyond what time and place, tax is the knowledge of tax and how to be able to preserve your tax, and also how to be pre-armed, or do I say to be apt in terms of tax techniques, will be very, very important to you. We've talked about so many things. We've been able to apply different strategies on how to create, how to manage, how to multiply wealth in terms of finance, in terms of what you do in your workplaces, and in terms of profession. It is very important for you to know that there are different tactics or strategies that tax laws are being employed strategically so that you can be able to have a significant preservation of wealth as you are on this journey. Fellow zillionaires, entrepreneurs, wealth creators, someone who is actually dedicated, that is on a journey of creating wealth, there is need for you to know how to have a strategy in place for minimizing of effects of tax on your wealth creation. As we continue on this journey over the years, over the month, over the weeks, over the hours, we've actually been able to see that tax is actually burdensome in the life of so many people as entrepreneurs. How do you be able to erode tax for wealth through your taxes? There are a lot of questions that will come to your mind. That how can I be able to erode? I call it the erosion of wealth through taxes or taxations. When you are deliberately building wealth, there is something that you must do. Many people focus solely on growing their assets. They grow their assets. They also, whether through businesses or ownership or through careers and things like that, be it real estate or stocks or bonds or other investment classes that they look at in creating and preserving their wealth. But I want to tell you today that it is very important for you to know the kind of strategies that could help you to account for impact that tax is going to pay on your wealth creation tools or your wealth business. And also, some people also look at taxes that, if not carefully planned for, you can quickly erode a significant portion of your wealth that you've worked so much at in building this over the years. at the very core issue of life, when you are creating wealth strategically, it is very important that every type of income that comes to your pockets or to your business, whether be earned through passive income or from your capital gain or from subject to taxations from the business or the career that you do, there is need for you to properly put what I call structures in place so that you will be able to minimize and avoid taxation of the government in high percentages depending on which countries that you are based in. Some countries do 15%, some do 17%, some do 25%, and some even do 45% depending on your earnings, your company, your business taxations, laws, or which country you belong to. If you're talking about United Kingdom, the taxations come from within 15 to about 21% depending on what kind of bracket you fall to. And also when you earn up to a certain amount of money, above a certain threshold, you pay 40-45% on the taxes. If you have second income, third income, and all those things. But there are ways for you to be able to avoid those. Now, if you are based in South Africa, a country called South Africa, there is a way you can actually look for how you can be able to put strategies in place so that you can. And this is why, if you don't put things in place effectively, stalling the growth of your finance, your family wealth over the time is going to be having a lot of lagging pains. Let's take an example. If you're building a business or you're investing into real estate, you are likely to generate income or capital gains that are subject to taxation over the years. Because at the end of the tax year, you want to pay taxes on the income that you've generated from that properties or those assets. Because they're generating, the government comes for you. There are some countries this day and age, especially in the artificial intelligence age that we're in, as an AI professor in Africa, top 10, there is one thing that you don't know, that the banks now have an alliance or an agreement with the tax office, the regulatory taxation bodies, so that you can be able to see what kind of sources of income come to your pocket, to your bank account, or to various account that you have, or taxations or tax-free account, so that they'll be able to know how to tax you. Again, this also boils down, leaving to a lot of people having limited resources to invest or pass on to the next generation. As part of the Zillionaires community, Aroseglinks Zillionaires community, we try to see how we can save tax and also how we can minimize a lot of things where you can be able to save beyond in terms of this. And this is why there is need for you to also be very, very careful when you're planning some of the strategies by employing intelligent tax strategies, or you also seek the expert of tax consultants from your local place or from your country of residence that can advise you on how to save, how to avoid, so that you will not get penalty from the government at the end of the tax year. In your country, I don't know, maybe it is end of April or end of February or end of March or end of September. Some countries have various versatility of the year end in terms of taxations. And again, you don't want to leave your earnings, you don't want to leave your income until when the year actually comes to an end. As someone who is deliberately building wealth on this journey, as part of the Zillionaires community, it is important for you to know how to see to your taxation so that you can be able to save over the time. And how do you minimize these bites of earnings that come in different trickles from different businesses, different earnings of passive, from different assets or from stocks and all those things. There are how you can be able to put an immediate and recognizable form of taxation in that. Again, whether you are actually earning income from your business or from your job or from your investment or from your earnings, it will be taxed. You need to know that. According to income tax brackets, there are set rules for government from your country. You've got to consult your government site, your government taxation bodies to see what kind of tax rules that have been put in place, so that in terms of the age bracket or the tax bracket for what you will earn to what, so that you can be able to see how to create portfolios in different areas. And again, there is a way you can also reduce the amount of income tax you pay. And that is why it's very important for you to know. There is in the UK, there's what I call ISA account. It's an account that if you want to buy or you want to invest for your children up until when they are 21 years old, or you want to buy your properties, the government will not tax the money that goes into that up until it reach a certain threshold. And the government will be contributing X amount of percentage to the money you put into that account. A lot of people do not know that ISA account is very good. Now, when you come to South Africa as a country entity, there's what I call 32 days or tax-free, or what I call 32,000 tax-free savings account for different companies, different entities, and the banks, where any money that you pay for up to 36,000 for 32 days, they will not be taxing that account every year. If you're able to save over the years, you build it through it, it will be tax-free and they will not be taxing that account. Any amount of money you save up until X amount of bracket, but you need to consult your bank for tax-free savings investments. Again, for your children, one of the most way to reduce that is for you to be able to see how you invest through what I call in the US, we call it tax-deferred accounts, such as the 401k. Or the IRAs or pension plans, because even in South Africa, in Nigeria, in any country you're based, in the UK, there's what I call pension plan account. Now you go to a body where they'll be able to coordinate with you. Okay, every year you save 36,000 up until X amount of years, and that money will be paid to you when you are about to retire or when you are retiring. They call it a retirement account or pension account. Again, I want to put a disclaimer here. I'm not saying that what the government does is not actually proper. It is proper, but at the same time, if you want it on the journey of creating wealth, you've got to know that pension is your liability, not the government liability. When you try to put structure in place, you will not be a beggar by the time you're retiring from those businesses or you are handing over. When you contribute to these various accounts, you can reduce your taxable income for the current year. Remember, taxes come every year, and some companies pay taxes every month. I don't know what kind of company you have. The money that grows tax-free until when it is returned into your account, you've got to ask questions from your banker, as part of some of this that we do, we make our bankers, our private entities, where we seek advice on different entities of businesses, of our savings, of different investments and things. Again, there are some things that some family wealthy people do, which I'm going to be showing you some of this secret, is that they plan for future of generations. They use tax deferred as retirement account, which is a way to build substantial nest eggs together. While minimizing some of these tax burdens, you'll be able to put some pockets of money, maybe for your kids, for your investment, for your businesses in different pots, but that is being regulated by different bodies, because there are some accounts that the government cannot touch because it doesn't reach X amount. Now, in some countries, they tell you that you can save up until maybe £50,000 per year, or maybe about 36,000 rand a year, or maybe $1,000 or $20,000. But you've got to consult which kind of expert, what kind of tax-free index or tax-free account or investment that you can invest into. So that by the time you're putting the money in there, there is interest generated every month to that. And again, there's what I call money markets. In South Africa, for example, even in the UK as well, in the US as well, you can also ask for some pockets of some investment that can save you of these taxes. It is important to start contributing to these accounts in various entities early, because as long as you leave your investment untouched, the more time they will grow over the years. These are some of the things that we learned about some few years ago as a family, as an entity who's creating wealth for future generation. We start putting this into what I call global equity, local equity, easy account, and so on and so forth. Another one is for you to split your tax income. That's what I saw, income splitting. Income splitting helps you, is another strategy that the wealthy people use to be able to reduce income tax by splitting them. For example, when you look at, I was reading the business news about a few days ago about the top 10 wealthy people. I found out that most of them actually have planned for charity. And they're investing into climate, they're investing into poverty, into schools, into different strategies. Now, when you look at them, because they're billionaires, multi-billionaires, the likes of Jeff Bezos, the likes of Ortega, the likes of Elon Musk, the likes of Bill Gates, every one of them actually have a charity that they're supporting in one way or the other, so that they can actually have what I call tax minimization and tax savings. Because when you contribute to the cost of development of a certain entity, be it climate change, be it poverty, be it education, be it in developing human capital, the government actually will not tax some of those, and they use this medium to be able to evade taxes, to be able to avoid tax. I call it tax avoidance. Again, for example, you can actually look at spreading your income amongst your family members that are in a lower tax bracket. If your family are people that you can trust, you can spread your income towards that area. This is particularly useful for families with businesses or investments. When you operate in business as an investor or maybe as a business owner, for example, you can pay salaries to your children or other family members who are in the lower brackets. Because imagine if that money comes into your personal account just once like that, it's going to be taxed. But now, when you split it into your children account, because as a family business or your wife account or people that you trust, it will help you to be able to have what I call reducing of the overall tax liability for your family. Why this strategy can actually be very, very effective? It is important for you to ensure that the amount of money you are paid are reasonable. Because what that are done are actually what I call IRS, they require in the US that family members receive compensation for services that they render. Now you can pay yourself, you can pay your family. The last aspect I'm going to be talking about today is what I call tax advantage investment, or we call it tax-free investments. Certain types of tax can help you to look for different areas. For example, municipality bonds or the government bonds, they often exempt you from federal taxes if you're based in the US or you're based in the UK or you're based in a country that is well regulated. You can actually have what I call offer state tax exemptions, because there are some bonds, stocks and shares that you buy in some countries that it is what they call tax exemption, because you are loaning to the government and the government use that money to do some certain federal government projects. Instead of them going to some world banks, they use that, and over the years they pay into that as an interest, and now they're not going to tax it because you're doing a help. Do you know that my Bible says we shall be lenders to nations? That is how you can be able to stick to that. And again, there's what I call the efficient investments, such as ETFs, exchange traded funds or index fund. They are designed to minimize tax liabilities. In South Africa, for example, we call it easy equities. In the US, we call it ETFs. In the UK, we call it ETFs. They are turnovers and they keep capital gain tax low by structuring your investment around different strategies, and you can grow your wealth and your business over the years, and you take away the burden of the government away from you. So friends and families, fellow zillionaires, you that you're actually watching, kindly share, kindly make sure you let your friends like, comment on this masterclass, and these are content that's going to be helping you if you want to know how to be able to save over the years. Again, this book, which is Wealth Beyond a Lifetime, is a book that I would advise you to make sure you go to get. Wealth Beyond a Lifetime. You go to www.juliusaroba.com/shop.html. You can order for the book, or you go to seller.com. You type a Wealth Beyond Lifetime by Dr. Oluwasegun Julius Aroba, and before you know it, you place for it. So friends and family, I hope you've actually been able to learn something today about wealth strategies in minimizing and creating wealth for your lifetime. I hope you're going to be able to share this wide enough, And if you want to be part of our community, or you're looking for experts to be able to train your company or yourself or your individual, in-house, we can actually assist you as a web creator. If you want to get across to us, kindly log on to www.juliusaroba.com and drop us an inquiries, and our team will be able to contact you from there. We hope to see you, and we can't wait to have you as part of the Zillionaires community. We rise by lifting each other. I'll see you again. Goodbye for now.